Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 19, 2022. Let's take a look at Intercontinental Exchange, ticker symbol ICE. They're a financial company. They provide liquidity to various industries. Look, the stock price is at $122. Market cap is about $68 billion. And year-to-date performance is a little bit down 10%. And look, they're down 12% from 52-week high. So at these levels, it looks like a very good buy. So that's why we need to look at this company in a little more detail. As you can see here, they make the connection. They help you with the data, technology, expertise, and also money needed to provide the liquidity and risk management. So with that, let's dig into this great company and see if it's a good time to buy Intercontinental Exchange or ICE. So with that, let's jump in. Look, from a leadership perspective, we got Jeffrey Sprecher. He's the CEO. He's got nice 93% rating. Looks like CEO checks out. He's leading the company very well. And I think they got a lot of pros from Glassdoor.com here. Amazing people, good working environment, and good work-life balance. And there's some con here. Work from home policy is not flexible. You can't have all the pros anyways. But overall, I like the 93% approval rating for the CEO. That checks out very well. All right, now let's dig in a little more detail. So Intercontinental Exchange, they're into exchanges, as you can see here. They digitize the exchanges. Think about New York Stock Exchange and exchanges around the world. They help with all the digitization here. And they also have fixed income and the data services. This is where they can help the fixed income business here. It's a high-end, high-quality market leading with the market-leading data. And they also have mortgage technology here. They can help with the automation in the mortgage industry. And they also provide liquidity and the risk management services, which is very much in demand at this time. All right, so let's look at the company in a little more detail here. Look, we got Intercontinental Exchange. They operate as a regulated exchange here, clearing house, listing, financial, fixed income, equity markets. Think about anything that you have to do with the equity market and fixed income. These guys are there. And they also provide financial securities to commodities. Think about oil and energy, interest rates, and so on and so forth. Basically they're into money business and the financial business. And look, stock has been down. It's a great company. Look at the way it's doing here. Nice performance. Look, nice steady eddy performance here. All these dips here. This one is let's see here, COVID-19 dip. As you can see here, stock came down, went right back up here, and some bumps along the way. Some bumps, as you can see here, all of them are great buying opportunity. Now we got one more bump, and there's a good support level right here. Around 120 could be a great support level here. I think this stock can go much higher. And look, from an analyst perspective, it's a very strong buy right now. And 10 analysts are saying buy, 2 are saying hold. Nobody says sell at this time. And, folks are saying this company can surprise when they announce the earnings. I think that will be the case. This company has been doing very steadily. And because they're into energy and oil complex is really doing well. And they're also into fixed income that can also do very well. So overall, looks like they're in a good sweet spot here. Look, oil price is exporting higher. That can help this company very well. So with that, looks like they're in a good shape here. Stock is taking a small beating, as you can see here. Just like other opportunities here, this one is also great buying opportunity right up here. All right, let's go into a little more detail here and dig deeper. And from a price target perspective, look, current stock price is about $122 and higher target is $161, much higher than the current price. Lower target is around $147. And one thing I love is technical perspective, it's a sell, as you can see here. Fundamental perspective, it's a buy from analyst perspective. I love this disparity here. that tells you stock has pulled back hard, but technically it's fundamentally it's strong. That's why I love this company. Look, from a moving average perspective, right now stock price is 122, and it's below its 5-day moving average. Current price is below the 5-day moving average, but look, I think they're above. Look, 30-day moving average is more than 50-day moving average, and I think it's turning around. Look, 120-day moving average is higher than 200-day moving average. I think it's trying to go higher and stabilize here, but recent pullback is causing some of these moving averages to really severely impacted in the near term. So with that, let's jump in, dig deeper. All right, now we got most of the fintech companies that are making money. Look, we got the net margin here. All these fintech companies are making money. And look, top of the list is Visa. Visa, many of you know here, it's one of my favorite company. Company doing great. Right now, look, RSI is 49. Tells you Visa is beaten down at these levels. Look at the net margin, 52%. They're literally coining money. And look, performance perspective, 2-year and 5-year, they're positive, and 1 year it's negative. And that's why long-term good story, short-term there is some pain. Stock is trying to turn around, as you can see here. And from the technical folks, look, from a Bollinger Band 20 20 period perspective, it's a 37% up from the lower band here. That's a good improvement. Middle of the road, stock is turning around. Overall score is great. It's 77. And look, they got nice $15 billion cash and great cash flow here. So that's why Visa is a great company, especially because it's beaten down up here. And then you got one of my favorite here, JPMorgan. Whenever JPMorgan falls down like this, I always pick up some JPMorgan stock and put it away in my long-term holding. This company also does very well. Look at the net margin here, 40%. Jamie Dimon, kind of speaks, as it is. He does not sugarcoat. That's why stock came down. Great buying opportunity. This company also did pretty well. Look, it's 77% in 5 years, not too bad. It's not like a Visa, but for a bank, it's a good performance. And we got a few more here. At this time, Mastercard is going higher. RSI is 58. I would not chase the ones with the high RSI. Look, they're just below their 52-week high. Instead, I would go with stocks like Intuit here. Look, Intuit is a good buy here. This one is RSI is 52, but look, it's down 32% from 52-week high. You could go into this one here. And then you got here PayPal. This one is in the house of pain, as you can see here. Good company. I like this company. You could slowly start buying some of this PayPal here. Expect some short-term pain, but it's a good one long-term. Nice performance, as you can see here, and the rating is 52 overall score, not too bad. So with that, we got a few more here. Keep watching the RSI level here. We don't want to chase the stock, but we want the stock to come down so we can buy. We got a few names here. You could look at these names also here. We got Shopify, Square, and even BX that we talked about this morning. So all these companies, BX, Shopify, Square, all of them work here. They're also trying to turn around, as you can see here in the near term. You could take a look at those also. And then we got a few more here with a little bit lower RSI. Look, we got Mercado Libre, what is one of my favorite stock here. And we got Workday, both are down with the RSI below 50 here. I would buy these companies also here, great ones. And then you got MSCI. Look, MSCI is a great company. There is not enough press for this company. Look, they've done great in a 5-year time frame here. And RSI is 47. Tells the stock is sold off here. Nice 36% net margin. It's a keeper. I would be buying this one also. And then you got a few more here. Look at DFS. Look at the great performance here. DFS, it looks like RSI is a little high for me right now. I would wait for a pullback here. All right, let's look at a few more here. Keep watching the RSI here. We don't want to chase. We want the stock to be down. Look, we got Coinbase here. Stock has been coming down off late here. So this one is a little intriguing, but I think it's okay to buy at these levels here. It's into crypto, as many of you know here. And then got TradeWeb, one of my favorite company here. Look, it's doing pretty okay in a 2-year period. You could buy this one also here, low RSI. It's also a good one here. Look, 21% net margin, not too bad. And we got a few more here, like SSNC is also a good one. Low RSI, as you can see here, has done great. And nice net margin here, 16%. And we got a few more with the beaten down stock, both Fidelity as well as FICO here. You could look at this one also. Fidelity FNF is looks like it's got a great rating here. And also look, net margin is good here. You could look at that one also here. And we got a few more beaten down names. Look, we got Market Access, one of my favorite company. They're into bond trading, digitizing bond trading. Stock is down big time. This one, it's not done great. Look, it's down big time here. Could be a good contrarian pick here. And we got a few more here with the beaten down stock. Look, Upstart. This one is a positive net margin company now. Stock is rolling over big time. You could take a look at this one also here. It's a good long term. Expect some pain in the short term. And you got PAGS and Futu. PAGS is a Brazilian company. Look, it's been beaten down big time here. Low RSI. Stock is trying to turn around. You could pick this one up slowly. And you got Futu here, China-based stock trading company here. It's also beaten down big time. You got to be a little careful with Chinese names, but this is a better candidate. You could slowly buy some, but don't rush and buy too much. And we got a few more here, like QFIN, again, China stock here. And we got two more here, Tiger and Mitech. Tiger is a China stock. You could look at that one too. All right. Now let's look at Intercontinental Exchange, or ICE. Look, ICE market cap is about 69 billion. Nice volume, no big deal. And low debt, I like it. And current ratio is 1. They have enough money to cover short-term obligations. RSI 34 tells the stock is sold off. IV percentile is 41. For you folks who want to sell some put options and make money, you could do that easily with this stock here. Company is making money, EPS positive, nice PE ratio, a low PE ratio. You could buy this one here. PS ratio is also low. A lot of employees here, 8,000. Company is making nice $1.1 million per employee. From a revenue perspective, great. Analysts recommend buy, all good here. From an earnings perspective, look, their earnings is coming up on May 5th here. So I think it's a good one. After the earnings, this can go higher, especially because stock has come down so much here. And it's in S&P 500 indices index. So that's why there's a good support from S&P 500 here. And look, right now stock price is 122, target price is 153 here. Stock can go much higher. And as you see here, it's been in the house of pain of late. 5-day, 10-day, 1 month, year to date, all down. But look, on the positive side, 1 year it's up. And look, it's up in 2-year, 5-year, 10-year. Look at the 10-year performance. It has done 423%. It's a keeper. It has done great in the long run. And nice sales, as you can see here. And there's a nice sales growth in 1 year, 5-year, as well as quarter over quarter. It's been growing its top line. And from a growth perspective, future growth perspective, nice future sales growth here. Look, this year sales growth, next year sales growth also positive here. So there's analysts are expecting good growth for this company. From an earnings per share perspective, nice earnings per share. And also look at the growth in the earnings per share. Nice earnings per share growth for next year. So analysts are upbeat about this company. And it's a profitable company with nice ROI and return on investment, as well as return on assets. So company is doing very well. It's a temporary issue here. I think it's a great one to buy. From a margin perspective, look, nice margin here. I like gross margin, operating margin, EBITDA, net margin, all great here. Company is firing on all cylinders, like we say here. And look, there is some debt, but debt is completely manageable with the low debt ratio here. Debt to equity is very low, as you can see here. And look, cost of debt is not much here. They're just paying 3%. So they got some good rate here. It's a good one here. and free cash flow positive, and they have nice operating cash flow here, good one here. And also from a free cash flow perspective for the future, using discounted analysis here, for the future also they're going to do good here in 1 year and 5 year. It's coming down slightly, but again it's a positive cash flow in the future also. And also return on invested capital is also a good one here. And look, they're paying dividend nice 1.20%, and payout is very small here, so your dividend is safe with a small payout. And look, their institutions own huge chunk of the stock here. Insiders are selling slightly, no big deal. And as you can see here, overall it's doing pretty well here. And let's look at a few more details here. From a moving average perspective, off rate is down. That's when you come and buy here. Put call ratio is very low. That tells you a lot of people are buying call options here, taking advantage. And from a Bollinger Band perspective, look, it's the low. It's 14% higher than its 50-day Bollinger Band here, and 9% higher than 20 period Bollinger Band. That's why it's improving at this time. It's beaten down. You could slowly buy at this time here. So 1 month low is 121. It's almost at its 1 month low here. That's why it's a good bargain here. And from a money flow perspective, from a technical perspective, look, it's a sell right now. From a technical perspective, money flow is also low, so that's why, technically it's not great. That's when you buy it. And we got some more stats. I will not cover this. We got ADX and Bollinger Band here and Kelton channel. I will not talk about that in detail, but overall you can see here technically it's a sell. And overall score perspective, it's 59 here. That's a good score. And look, valuation perspective, low valuation, high score for valuation here. And nice growth. I like the growth here. And Altman Z score is a little low here. For financial companies, normally, they come with a little bit lower rate, which is okay here. Nice book here. Books are improving steadily here. That's why nice Piotrowski F score of 6 here. All right, so with that, let's jump in here and look at the numbers. From a number perspective, I like the clip here, nice EPS, I like it. The revenue, annual revenue is improving, that's great here. Shares outstanding, pretty coming down slightly, that's great. They're not diluting the share count. Operating margin, it's not great, but it's okay. Look here, it's it's slightly higher from last time, but overall trend is not good. I think they have to improve this situation here. Net margin, it's good here. Look, net margin perspective trending higher. They have a nice bump here. I like it. They are making more money, keeping the more money they make. And from a debt to equity ratio perspective, they had some high debt back in 2020 and they paid down. That's a good news here. So overall numbers are good. I think they should improve their net margin situation here, but good from a operating margin, they have to improve. Net margin, debt to equity ratio perspective, they're doing pretty okay here. And nice revenue, top line is good here. Earnings is also good, great one here. All right, now let's look at the earnings history here. From an earnings history perspective, look, this company is steadily doing very nicely here. They have strung together a couple of very good quarters with nice surprise both on the top line as well as bottom line. And back in 2019 here, this is during the interest rate hike, they had slight miss, as you can see here, slight revenue miss, no big deal here. And they also had some slight revenue miss back in 2019, but I think for most part they've been spotless. And look at the revenue here, nice revenue increase here, very steady Eddie type company here, slow and steady. The total revenue was 1.16 billion. Back in 2017, now it's 1.84. It's slowly growing the revenue, not in a rush, but that's always good here. All right, so that way it checks out. They're doing very well. If they can string together one more good quarter, stock can go higher from here. All right, now let's look at the monthly performance matrix. From a monthly performance metric, so far this year, stock is down, as you can see here, down almost 10%. It's in a correction territory. But look, they've done great in 2021, 2020, all the way to 2016. 2018 was a 2018 2019 around this time frame we got some inflation issues, and company have done great despite of inflation. That's why this one is a good one to buy. It will protect you from these inflation worries, and it can do better. All right, now let's look at the chart. From a stock chart perspective, look at the run here. Stock has been doing consistently well. Look up, 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 and there's a down here. COVID-19 nicely went back up again. Few bumps along the way, but all these are buying opportunity. This one is nothing, nothing different here. Stock came down as you can see here. I think this can also go higher, just like it's done in the past, like here and also here. So that's why I'm not worried. It's a great buying opportunity. I think it's a good one here. All right, now let's look at 1 year chart. From a 1 year chart perspective, look, stock is down off late here. Nice pullback as you can see here. And I think there is a good support level right here. I would be looking at around 121, 120 level. It's a good support level here. Stock can go higher from here. Earnings is around the corner as you can see here. 5/3, May 3rd is the earning. When the stock pulls back like this, look, we got a pullback here. Nice pullback. A nice pullback right here, and stock came slightly down here, and we got one more earning here. Stock came down, and we got one more earning right here. Stock went higher, and we got stock came down before the earning, went higher. So this time I expect something similar. Stock came so much down before the earnings. After the earnings it can go higher. All right, momentum is down. That's why technically it's sell. And look, from a volatility perspective, volatility is increasing mainly because earnings is around the corner. And look, from a DMI perspective, red line goes higher, blue line wants to come lower. Distance is pretty significant. That tells you that technically it's a bearish at this time. On the positive side, on the balance volume want to go higher. That's a good one. More people are buying. Check in money flow after coming down hard. Now it's trying to go higher. Folks are now buying this stock here. It's in the cusp of turnaround. I think that's when we buy here and accumulate. That's a good one to accumulate at this time here. All right, now let's look at Bollinger Band study. From a Bollinger Band perspective, look, stock came down here. Bollinger Band is tightening as you can see here. Touched the lower band, went all the way higher, and touched the middle band, went higher. Came below the lower band, went higher. Now it's touching the lower band, using it as a support level here. I can see it touching the lower band, going higher. So that's why it's a good one to buy here. Bollinger Band also kind of tells you it can use the lower band as a support level, like it has done here, and it can go higher from there, and also one more right here. All right, now let's look at the option chain here. This one, it's a not very heavy option volume perspective. Look, option volume is there somewhere around the current stock price as you can see here. And look, current price is around 122 here, and around 120 or so. Just 10 open interest, but as you look higher strike price 130, there's a nice 2000 contract here, and even at 140 nice contract. So folks are paying cheap money here. They're paying let's see here, around $2 and $1 and buying all these contracts, expecting the stock to go higher. That's why a lot more open call interest here as you can see here than put interest here. Look, put volume is pretty almost where is it right here? It's not much at all. So that's why put call ratio perspective. Let's go into detail right here. Look, from a put call ratio perspective, call contract 1298 and put contract is just 162. That's why folks are bullish. They're buying call option, especially stock is down here. Normally I don't buy call option when the stock pays a dividend like this one here. But this one, given it's down here, you could venture look into this one. But at the current time, I would not buy call option, mainly because it's a high volatility. IB percentage is slightly high. That's why I would rather buy the stock itself. If you want to buy call option, you could do a spread which will kind of compensate for this high volatility, so you don't pay too much. All right, let's look at the verdict here. What should I do? You might wonder. So look, the stock has come down significantly. When they announced last quarterly earnings, they announced a 15% increase in the quarterly dividend. That's a good story. Company is sound, and their revenue per share, look, it's up 17% year over year. So company is doing very well. And look, their net revenue increased by 10%. That's also great here. Company doing well. And total transaction revenue grew by 11%. Again, good here. And look, overall they're doing very well here. And one more thing is their 17% increase in the revenue, as you can see here. That's a great one here. Strong performance was driven by 71% increase in the interest rate business. They have this fixed income business that's doing very well here. And look, you talk about inflation, interest rate hike. This company is better when there is an inflation worry. And also if the oil price goes higher, this can also do very well with the energy business, their energy investments. That's why I think both energy price increase as well as raising interest rates are playing into this company's favor here. That's why it's a good one here. And look, revenue within the global oil complex increased 29% year over year. So with the oil price surging due to this whole geopolitical tension, it can help this company here. They got oil, they got natural gas, both are flying high right now. So looks like they're doing very well overall. So I say, go buy this fundamentally good company. It's beaten down at this time, buy the dip and accumulate. After the earnings, this stock can go higher. It's a good long-term play. It's been doing great in 2-year, 5-year, 10-year. I think it's a good one to buy this dip here. So with that, thank you very much. Happy investing and trading. Please subscribe.